Hi everyone, this is Bill Mulvahill here with Trailhead Planners and another episode of Coffee, Sweaters, and Finance. I'm here today to talk about Social Security taxation and why it matters. How is Social Security taxed? Well, it's going to be taxed at ordinary income rates. However, it might not entirely be subject to taxation at all. It will fall into one of three buckets. Either none of it will be taxed, 50% of it will be taxed, or 85% of it will be taxed. And it's going to fall into one of those buckets depending on how much other income you have flowing on your tax return. This is important to keep in mind when you're considering other tax planning strategies. Some important ones are you going to recognize a gain or a loss by selling an investment? Do you want to do a Roth conversion? What investment should you buy in your taxable account? If it's going to be one that kicks off income, it might bump your Social Security tax up to a higher range. In addition, what account should you pull from? If you're going to pull from a pre-tax account, that also might bump your Social Security up to a higher level where it's going to be taxed at a greater rate. This is important to keep in mind as you're considering tax planning in retirement, and it's part of why working with a holistic financial planner and tax planner is important. Have a great day.